Section B, Planning, Budgeting and Forecasting. This section is worth 30% on the exam. Section B1 will cover strategic concepts, so familiarize yourself with all of them. The budgeting sections, B2, B4 and B5 covers a lot of material, but complete the Excel budgeting problem in learning these different budgets. The IMA loves to test learning curve analysis and average learning model. Know how to calculate and the pros and cons of regression analysis and learning curve analysis. Part 1 Section B.1, Strategic Planning, Horngren Chapter 6. Note: the learning outcomes to be tested have been formulated as questions and answers are provided. Explain how strategic planning determines the path the organization will take to achieve its long-term goals and missions. Strategic planning matches the company's strengths and capabilities with market opportunities in order to achieve its objectives. Strategic planning is important in directing the company into the right industry and identifying the position the products will occupy in the marketplace. 2. What time frame is appropriate for a strategic plan? The time frame for a strategic plan is usually longer than other types of plans. The most appropriate time frame will depend on the industry, the product, and the organization's goals. 3. What external factors should be analyzed during the strategic planning process? Strategic planning should consider political factors such as industry regulations and political instability. It should also consider economic factors such as the state of the economy and the viability of specific markets. Strategic planning should also consider social factors such as the market's culture and acceptance of the product. The expected reactions of competitors and their ability to respond should also be considered in the strategic planning process. 4. How does this analysis lead to the recognition of organizational opportunities, limitations, and threats? The strategic planning process should be broad enough to identify many different types of opportunities, limitations, and threats. By analyzing different aspects of each potential market, the company can decide how well the company's strengths match the opportunities of that market and how capable the organization is at coping with the threats. 5. What internal factors should be analyzed during the strategic planning process? The organization first needs to analyze its products and decide whether existing products can be sold in new areas. The firm then needs to evaluate the company's ability to develop new products to meet the needs of the market. The firm also needs to assess its ability to effectively get the product to the customers in the right place at the right time in the right quantity. 6. How does this analysis lead to the recognition of organizational strengths, weaknesses, and competitive advantages? The analysis of internal factors will help the company discover what it does and does not do well. The company's strengths can be compared to competitors or best-in-class standards to find opportunities to develop a competitive advantage. 7. Explain how analysis of internal and external factors leads to the company's mission, which then leads to the formulation of long-term business objectives. The analysis of internal and external factors will provide the company with an idea of the market opportunities that match the company's strengths. The mission can then be formulated to identify how the organization will go about satisfying this market need. Objectives can then be set based on the size of the opportunity and severity of threats, as well as the company's ability to capitalize on the opportunity and avoid threats. 8. What roles do capital budgeting and capacity planning play in the strategic planning process? Capital budgeting is defined as the process of making long-term planning decisions for investments. Capital budgeting decisions must be made with the strategic plan in mind. Projects that will help the organization live out its plan and reach its objectives should be undertaken, given they provide a reasonable rate of return. Capacity planning is also based on the strategic plan. Capacity planning has to consider the estimated level of sales and growth, as well as the nature of competition and their reaction to capacity changes. 9. Explain the importance of congruency between short-term objectives, tactics for achieving these objectives, the master budget, and the strategic plan. It is tempting for managers to make decisions that improve short-term performance but do not benefit the organization in the long run. It is important, therefore, for managers to be evaluated on more aspects than short-term profit so that the strategic plan of the company is considered in all decisions. The master budget provides managers with a guideline for measuring their performance relative to the results needed to achieve company objectives. 10. Identify the characteristics of successful strategic, tactical planning. An effective strategic plan will successfully match market opportunities with internal strengths to create competitive advantage. A successful strategic plan will retrieve information from a variety of personnel and formulate achievable goals. Objectives must be specific, measurable, realistic, and achievement of the objectives must improve the company's position in the marketplace. Successful planning also involves measurement and feedback to allow for rewarding performance and initiating corrective action if necessary. No Porter S5 forces be able to define contingency planning. Contingency planning involves identifying potential deviations from normal operating conditions and developing plans of action to deal with them. Also explain the importance of contingency planning. Contingency planning is important because of the difficulty of accurately predicting operating conditions in the future. The company has to be capable of dealing with changing conditions and continue to operate profitably.